we look at the bull trade as of this morning, we actually got a nice bounce this morning, but Friday, even with the down move, we were still up money. We're still up $70. That's because we got such a good entry. So a quick discussion, and one of the things we talked about in Trader Transformation Workshop was the advantages of doing a bull vertical when you get a good entry. You know, if we were looking at our charting, let's see charts here, and go to the Russell. When we entered this, we were down here deep into a support level. If I had entered some broken wing butterflies at this point, and we got a really big aggressive bounce, I probably wouldn't have made money with that bounce unless I was a positive delta butterfly. But if I'm very flat delta or maybe negative delta, there's a good chance that when I get this bounce that I may end up drawing down. I think we've all had that situation where we see that, and it creates if the bounce is hard enough, it creates a situation where I have to make some sort of an up adjustment, and then I make that up adjustment, and then the market comes right back down to where it was or lower. A lot of times that broken wing butterfly is going to be hurting at that point. In other words, it's going to be underwater. You're going to have some sort of a drawdown with it. The great thing about this strategy here is where there's no upside adjustments is you can get up move of 100, 200 points, and you can get the market can come back down 100, 200 points the next day, right? And this position is still at break even. It may even be up money. So that's one of the good benefits of this. And the same thing here. You know, we did nothing. We got a really high implied volatility day. We got a really hard down move, but no problem, right? Not an issue. Then of course, if we bounce off here, then like today we're up $400 already with just a really slight bounce. So just keep that in mind when you're trading. Just because you enter a broken wing butterfly, it doesn't necessarily mean you have more downside protection. You may have more downside protection initially, but as the trade goes on, a lot of times you're creating additional downside risk in a broken wing butterfly strategy, where something like this, you're not creating that risk. It's just a way to think about the dynamics of trading and thinking more dynamically rather than thinking statically about your position, because there's a big difference.